Hey, what's going on, everybody? This is Tyrone back with Tech Life. And here I have a great article for you guys from Seeking Alpha. I'll leave a link to it in the description so you guys could check it out. Verizon, I am on hold after the recent earnings release. So just as a disclaimer, I'm no financial expert, no stock expert, so don't go and sell and trade any of your Verizon stock based on my opinion. Form your own opinion based on the information. So this is just a summary from the article. So optimism around Verizon stock is returning after the company provided better than expected results last week. Again, you guys heard my position and opinion on that. Q4, you should be growing. It's the holiday quarter. It's a busy quarter. It's when all the numbers for the carrier spike. So that should be the norm. I want to see, can they replicate this in a Q1, Q2, and Q3? That's what I want to see. I don't want to see this just for Q4. I mean, if they continue losing for the first 3 quarters of any year and they just grow in the fourth quarter, you're not winning. You're losing. So, of course, there's optimism. It looked great. They added 318,000 postpaid customers on the consumer side. In total, they added 449,000, including business. They had an uptick in revenues. I mean, they look good. But now we go into 2 quarters where they did price increases. Q1 is business, Q2 will be consumer. So we will see what those numbers look like when they report Q1 and Q2. In spite of the business momentum in the postpaid segment, I have turned more cautious on the business following the earnings release. So it looks like some analysts and investors are turning more cautious on Verizon. I take a closer look at margins, free cash flow, and Verizon's ability to continue reducing leverage in 2024. So with the price increases that are coming due, right, $4 per line, 40 to 50% of the base, Verizon is expected to drive close to $1 billion in profits, in net profits. Even if that leads to another lawsuit, they'll pay that out. They're still going to probably make $800-900 million in pure net profit. Looking for a portfolio of ideas like this one, members of the Roundabout investors get exclusive access. I mean, you guys can check that out. And then there's additional information in the article, which I highly encourage you guys to check out. So again, there's optimism around Verizon. Their EPS is strong. They're guiding a higher free cash flow for the year. They did $18.7 billion for the year total, which I think was the highest free cash flow in the entire wireless industry. Their capital is coming in at 17 to 17.5 billion. So investment is still quite intensive. If you divide that into the revenue, I'm told is probably the least amount of capital intensity based on the amount of revenue that they make. But it's still a huge chunk of money. They could invest more if they want to, but they want to pay out those dividends. They want to increase that. Eventually, apparently, they want to do buybacks as well. And it looks like they'll be able to do that in 24, maybe 25, whenever they decide to do that. They will have another somewhat analyst type day, February 5th. We'll see if we can get some tidbits on that. We'll see if they allow the public to tune in. I'll be looking forward to that. But for the rest of the year, Verizon, starting off Q1, I've been watching the football games over the weekend. They do seem to be more promotionally heavy, which is what I was told. So trading in the any phone, any condition still seems to be a promo that they're running right now. I saw it for the Galaxy S24s. If you trade in any Galaxy, any condition, you can get one for free. So that's a very strong, aggressive promo that could pull some customers from T-Mobile. From what I saw from T-Mobile, the oldest device that you can trade in on a Galaxy is an S9. And I think the highest amount you can get back for that is $800. Correct me if I'm wrong, but I think that's what I saw briefly. So if the port ratios start swinging Verizon's way, T-Mobile may have to make some adjustments. AT&T, they seem to be solid and strong on their promos. They're still pushing new and existing customers, although Verizon is now also pushing that, if you guys saw those commercials. There's a lady that says, "Oh yeah, you can trade it in. It's broken." And then there's a guy on the other side that says, "Oh, I'm already an existing Verizon customer. Can I get this too?" And they say yes. So that's something that they seem to be pushing. I would not be surprised if that's one of the ads that they push in the Super Bowl. I think the two ads that they will push in the Super Bowl is new and existing customers get the same deal, any phone, any condition. And I think they will also push fixed wireless access home broadband. That's what I saw over the weekend too. So I think that's what they're pushing. They're going quite aggressive, I would say. What they're trying to do, I think they're trying to limit the amount of customers that leave them. Meaning they will still lose customers, but they're trying to drive volume into the stores and of new customers, so that can kind of offset the amount of losses that they will have to post. And I think that trickles into the second quarter as well. The second quarter, that's when the $4 per line price increase hits. It still hits in somewhat of the tail end of the first quarter, but you probably won't see a bigger effect of that in the churn until the second quarter. So March 1st, all of the prices go up effective as of March 1st. That's when you will see it on your bill. And if, switching and movement happens, it likely won't happen until the second quarter. So I do see T-Mobile somewhat ramping up their promotional activity in the second quarter. That intelligent team is probably aware now that this is happening. Same with AT&T. So they're looking at grabbing those customers, and it'll be a very competitive second quarter because of those price increases. So again, Verizon is going to be up and down for the year. They're going to be ups and downs. Q1 is probably going to be down a bit. If they can't grow much on business, they usually are the weakest for the quarter, right? They've been able to remain positive overall because of business, but they just implemented price increases, and they told us at the quarterly earnings to expect weakness in the Q1 numbers because of that price increase. And they will likely warn us at some conference about this happening in the second quarter because of the price increases that are coming to the consumer side. So just wanted to make you aware of that. Again, this will lead to great results on the financials. I don't know how much this will do in terms of growth, but Verizon is looking at making this work. Sampath is looking at, okay, I want 80% volume, 20% margins, something along those lines. And they're trying to make it work. They are really trying to make this work for the company. It's a very expensive network to operate. They're spending heavy. Their operations costs are quite high. They're moving to 10 gig backhaul circuits in the markets where they don't own one fiber. So it's a very expensive build. They continue expanding. So, they need to make profits and margins to get consumers and shareholders, keep them happy, and still being able to invest the same amount of capital that they've been investing. So let me know your thoughts in the comments. Make sure you guys like, share, subscribe if you're new. Follow my social media outlets. This is Tyrone with Tech Life. See y'all in the next one. Peace.